Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about PI Industries, a top agrochemical firm coming at very interesting levels. So let's get started. First of all, just remember that this is not a stock recommendation and anything that you take on is purely on your own basis, and I'm not in favor or against any company that I talk about. Before I talk about PI Industries, here's my request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. And also, you can pay $100 upfront, you get 1 year access by paying for 10 months. If you're not able to pay on Patreon, kindly do email me and we can work things out with something else. Now about the company established in 1946, PI Industries provide agrochemicals and crop protection products. It is a top brand in this segment and one of the best companies in this segment and the oldest one. A multinational firm spread over a number of countries. The market cap of the company is around 44,000 crores. If you look at the numbers, then these are December quarter numbers. Sales went up by 17%, profit went up by 15% in a very difficult environment. It is a virtually debt-free company, high promoter and institutional holding, 12% free float. Even in those 12%, there are HNIs and large investors invested. ROE is around 18%, margins at 24% is very strong in this sort of a business environment. If you look at the performance, stock has recovered from March 2020 lows very smartly and numbers have been robust. One of the best return ratios, and in fact in the last 4 5 months it did fall. So 6 months ago it was trading at something like 25 2600, but it has recovered from those lows and has been doing well on the charts. A decent sales and profit numbers are being produced by the company, and hoping for much more better numbers in the June and September quarters, because last year it was a complete washout. And remember, last 2 years for the agrochemical industries hasn't been that great in the summer season, in the monsoon season. So this time around it seems like the season should be normal and should do extremely well and comparable to what happened in FY19 or so. So have been surging recently and have been doing well. This is in anticipation of a better results in the March quarter and more 6 months of good results to come in. It has expanded smartly geographically into other regions and has a healthy dividend payout. So why I believe it is a buy on decline is the market leader into this agrochemical space, and it is a global agrochemical company which exports to more than 50 60 countries across the globe. Should outperform as rural economy recovers going forward. So a good 2 3 year you can say investment can be done here, and gradually you will see the returns taking place. Numbers have remained strong in a very difficult business environment, as I said, that where raw material costs have increased and the demand has reduced due to the pandemic over the last two seasons. Valuations are attractive at around 18 19 times earnings, and it is currently valued at around 1 time sales, just over that. So not difficult to probably look at in terms of valuations, that it looks pretty reasonable. 1 time sales from 2 years forward earnings, that's what I'm saying. So a long term buy, this can be one of the best 2 3 year buys in the segment. In terms of technicals, there's strong support between the 2700 2800 region, and that's where it is perched at. Have made a long-term bottom at 2200. So this is what I was saying, that between 2200 to 2500 it remained about 5 6 months back, and has given very good returns for those who invested at those lows. And now it is gaining even more strength. Has recovered smartly from the recent times, as I said, from 23 2400. So a long-term stop loss could be around 2500, and we could see 3400 3500 coming in the next 1 1.5 years. So in my opinion, buy on major declines. Even at current prices, you can start accumulating and keep track of numbers. Have a 3 year view. This should give very good returns, hopefully 50 to 60% returns over a 3 year period, and have less than 5% exposure into such stocks. So this was my video on PI Industries. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.